Everyone loves a bargain, and property is no different. We're always looking at getting a property which is below market value, something which is undervalued and gives us an edge so that we can get a capital gain in the future. The financial benefits of investing for high profit margin and hedging against inflation. It's important to do your market research to understand the market trends to identify these undervalued properties. For instance, research average prices, recent sales, and typical time property spent on the market. There's a difference between buyers and sellers. Both sides have got certain motivations. For example, if a seller is highly motivated, they're most likely to reduce their prices to a level which may be undervalued to attract the right buyers. In reverse, there may be a situation where there are many buyers around and fewer sellers. It tends to put prices up, and your chances of buying undervalued property are limited. But it can happen. You still can get undervalued properties even in a high market if you understand how it all works. I believe bargains can be found anytime. Do your research and know what you're doing, or work with someone who knows what they're doing. Basic factors are market analytics. Always look like factors like close to amenities, schools, main roads, transportation, and facilities, and that sort of thing. The most important thing is to use data and resources to gather insights and market trends and property values. We'll discuss this in more detail now. Analyze property fundamentals and market position. Foundation of identifying undervalued property lies in understanding their core characteristics and how they compare to market standards. Look for properties where the current price doesn't reflect the underlying value of these fundamentals. Location quality relative to price point. Building quality and maintenance condition. Is it well maintained? Has it been built well? Tenant mix and credit quality. When you look at the property, you look at the payment system, where they've been paying on time, what type of good quality tenants are they? Are they similar in the whole building? There's several tenancies in there. Look at the whole standard of the tenants. Occupancy history and current vacancy rates. Has it got a history of being vacant regularly? Isn't currently got some vacant spaces there? Historical income and expense ratios. Have there been continuous increases in rental income over the past 3, 4, 5, 10 years? And expenses, have they been increasing steadily, or there's been a rapid increase in the last few years? Zoning and potential for highest and best use. This is very important because you look at things like what potential has it got? Has it been rezoned for higher floor space ratio to build more building in there? Maybe another use to higher, better use, or whatever it may be. Identify market inefficiencies. Market efficiencies often create opportunities for finding undervalued properties. Key areas to investigate include operational efficiencies. Properties with poor management or deferred maintenance often trade at discounts. Look for above market operating expenses. Below market rents. Poor tenant retention. Inadequate marketing or leasing strategies. Deferred maintenance that can be addressed cost effectively. There may be problems there. Why are they spending the money to do this? Is it going to accumulate, become a very large expense down the track? Market knowledge gaps. Some properties are undervalued simply because they're not well understood in the market. It could be unusual, like things like childcare centres, or there may be rubbish tips, or some motel, which people don't understand, or not everyone understands anyway, the average investor. They're specialised properties. Properties in transitional neighbourhoods that haven't yet been recognised by broader market. Complex properties that require specialised knowledge to evaluate. Properties with unclear or complicated ownership structure. Assets in submarkets with limited transaction activity. Research local market dynamics. Understand local market trends helps identify properties that are undervalued relative to future growth potential. Study demographic trends and population movement patterns. Track major infrastructure projects and their impact on property values. Monitor local business expansion and relocation patterns. Analyze zoning changes and develop pipeline. Review historical price trends in different submarkets. Calculate and compare key metrics. Quantitative analysis helps identify properties trading below their intrinsic value. Look at things like cap rate spreads compared to market averages, cost per square metre relative to comparable properties, net operating income, growth potential, replacement cost analysis, debt service coverage ratios. Also look at the physical characteristics, physical metrics. Parking ratio compared to market standards. Is it below average or above average? Building efficiency factor, floor plate sizes and configuration, ceiling heights and loading capabilities. For example, industrial places, they've got low ceiling, not as good as some with the high ceilings, whereas in an office situation or retail, not so important. Energy efficient ratings. This is becoming very important as energy costs increasing. Look for special situations. Certain circumstances can create opportunities to acquire properties below market value. For example, distress situations, properties in foreclosure or bankruptcy. Estate sales or partnership dissolutions. Partnership problems are very common in properties and businesses. They've got to sell the property to dissolve the partnership and get the share and move on. Properties with upcoming loan maturities. They may be on a low interest rate and the interest rate's about to go up. They may not be able to afford to keep the loan going. So that's an opportunity for you. REO properties from financial institutions. Tax delinquent properties. Value-added opportunities. Properties with below market value rents approaching lease expiration. That is a good one to know because of situations where things have been, they've sold the business and to lower rent to sell the business and the owner's given them a lower rental and there's opportunity there to increase the rent by doing certain things or simply just finding better tenants to pay high rental. Buildings requiring cosmetic upgrades or minor renovations. Properties with unused density or development rights. Assets with inefficient space utilization. Maybe you can reconfigure it to get a better, more space, more leasing space. For example, there might be some outside area which has been used for anything. You may decide for a restaurant there or a cafe which utilize outside seating and charge and rent for it. Properties with potential for adaptive uses. That is a very good one because I call them utility properties. Personally, I like them. I look for properties that can have certain uses because things change all the time. We go from retail to industrial. We're in a situation with offices have gone out of fashion. They might come back into fashion. We've got a retail situation. You can change that to something else maybe down the track. Maybe develop it to a mixture of retail and residential, etc. Build a strong information network. Creating a robust network helps identify opportunities before they reach the broader market. Connect with the local business owners and community leaders. Cultivate relationships with local real estate agents and property managers. Monitor bankruptcy and foreclosure notices. There are several ways you can get that. You can get on certain subscriptions which are buy them, give them away. Just go do your homework on that. There's various ways of doing it. Track ownership changes and property tax records. Has it been changing ownership regularly? Follow up local news and development announcements. What's happening in the local area? Has there been changes in the type of tenants moving in or type of people coming in? Demographics. Maybe there's a development proposal for a new school or hospital or road project which could make a big difference to the property. Evaluate property-specific opportunities. Each property type has unique characteristics that can indicate undervaluation. Office properties, outdated common areas with potential for cost-effective upgrades. Inefficient floor plans that can be redesigned. Properties with potential for spec suite programs. Buildings with convertible spaces for modern use cases. In the retail situation, poor tenant mix that can be improved, outdated signage and visibility issues, underutilized parking areas, properties with potential for outparcel development, industrial properties, properties with unused yard space. That usually industrial properties take up more land, and obviously there's a lot of parking there, sometimes far excessive. Maybe there's opportunity to put a building there, increase the size, rent it out instead of being laying vacant. Buildings with convertible clear heights. Getting back to industrial, you can split the floor sometimes, middle, so you go to mezzanine level there, increase the rental possibilities. Properties with potential for additional loading doors. Sites with unexploited rail access. Consider timing and market cycles. Market timing can significantly impact property values. Study historical market cycles and current position. Monitor interest rate trends and their impact on valuations. Study new supply and absorption rates. Analyze sales velocity and time on market trends. It's taking a long time to sell. Means something. To get something value, maybe you can move in and negotiate a lower price. Consider seasonal factors in different property types. For example, in a resort area, for example, you're looking to buy property in a snow area. A good time to buy could be summer, and vice versa in the summer resort area. Finding undervalued commercial properties requires a systematic approach, combining market knowledge, financial analysis, and local expertise. Success comes from diligent research, building strong networks, and having the expertise to recognize opportunities that others might miss. Regular monitoring of market conditions and maintaining up-to-date knowledge of local trends will help identify the best opportunities for investment. I'd like to hear your comments. If you have any questions, below, and please subscribe to this channel.